Hi, for those of you who are new, my name is Josh. I'm from Good Brothers Trading Academy, and today we're breaking down the Apple trade. We're doing a recap, showing you the technicals, where it held support, and why we got into the trade. Okay, today we're going to do a trade recap on Apple. That's AAPL, and why we took the trade and what we were looking for. This is the weekly time frame. And first and foremost, we believe in starting from the top-down approach. I like to look at the weekly time frames to the dailies, 3-hour, and so forth, so on, especially for newer traders starting out. Okay, so the newer traders starting out shouldn't really go beneath a 30-minute time frame. We should be waiting for those opening range candles to form. I know for a fact that, of course, there's more volatility on the open, but the stock moves faster. If we can't read the technicals, I don't want you to get scared out of your trade, take a loss when you were ultimately right in the trade. But before we continue to move on, do me a favor, hit the subscribe button, turn on the notification bell. That way you're updated every time we upload new content, and then smash the like button for me. So if we were to break out our Fibonacci tool, and we start from this pivot low down at the bottom, and we go to the pivot high. Now, I'm not saying you always have to use Fibonacci's. I love buy and sell zones, supply and demand areas in the market, okay? And I go over that, and that's the way I prefer to trade is buy low, sell high, okay? I stick to that same old principle. That makes a lot of sense. But what we do want to understand is when we get a serious move up in a stock and then we get a pullback, generally the 618 and that 50% and 38.2 is they are very significant levels, and we need to be paying attention to those significant levels. And if we can figure out where the buy zones are at, we have an understanding of which way the stock is going to move, especially if we get some news or some type of a catalyst. Okay, so we're pulling right into the 61.8 retracement level on the weekly time frame right down here, and we get this reversal. Okay, so let's go ahead and we'll delete this. We don't want it too complicated. I already have some zones drawn in, but I just wanted to give you an idea of what I'm first looking at. So we get a strong momentum move up, we get a pullback, another strong momentum move up, and another pullback. Okay, and then we waited for a weekly reversal candle telling us that the direction of the stock is up, and we're just waiting for pullbacks to get in. But why and where do you know when to get in, and how do you know the stock is going to continue, right? So what we're doing is we're going to go to the daily chart, and this is a huge takeaway right here. So earlier, looking at smaller time frames, these are my buy and sell zones. Okay, so I highlight the bottoms here, and anything, this would be a complete zone, right? So 2 lines in between would be a zone, and we'll get a little further into that, and I continue to draw or color them in. Okay, so I understand where they're at and I don't get confused on my lines. Now, one thing that I noticed, and this was the big takeaway here that I really liked, the daily chart is so important. And what we want to look at is we have this gap up higher, right? So we have this double bottom, 1, 2, a move higher, consolidation sideways, or a flag pattern. Now we have a positive news catalyst, okay? Or what's happening is Apple is coming out with a several different product line or several different phone line, right? And so going into this news event, we started getting and seeing a lot of buying pressure. Now the release is tomorrow, so we'll see how the stock reacts tomorrow. But first and foremost, we get this nice gap up higher, and we get it right into. I made this particular zone because of pre-market, this green zone. Okay, so we have this flag here. And this is what I really like. Now we have the gap higher, but what seems to me and what I'm wanting to see hold is we gapped over a pivot or the flag pattern, right? We gapped over the pivot, and we also gapped right into this top of this breakdown bar. And so I know if we hold this level, if we do not start coming back to fill the gap below, if we do not start crashing the stock, if people are not taking profit, and if more people, if there's FOMO, that they're worried that they're going to miss the good move, and this is a positive catalyst for Apple, the stock should continue. Or people will come in, they're in profit. Maybe somebody was buying the dip down here. Maybe somebody bought on this day. Maybe somebody bought at the top of this day. But regardless, when the stock opens, there will be people taking profit. If there are people taking profit, that causes selling pressure in the market, which will drive the stock or the price down. And then short sellers jump in and then continue to push the stock price down. So we wanted to see if it holds this particular area. Okay, so let's clear the charts so it's not too complicated. And then let's get into the 3-hour time frame. And the 3-hour time frame had me a little worried. Okay, first thing in the morning. So here's our zones. This is what I was talking about where I paint them in. Those of you who haven't been following me very long, these are my buy zones. Okay, so I understand that buyers are here. There may be some sellers here until we get over them. Buyers step in just like they did on this pattern here, pushed it higher. We know that this was maybe some sellers or a supply zone, so an overabundance, which drives the price down because of selling pressure. So what I wanted to see is this here. We gapped into this. We had this big push up, and we have this candle right here, which is like a tail candle, but kind of indecisive. We had a lot of selling in the top of that candle. So in many cases, we would catch something that looks similar to this. And this is what I was worried about or waiting on, is getting a sell bar right here, right after. In so many cases, this is what happens. And then we may get like a push up, something like this, and then a failure, and the stock comes down and fills the gap price below. Okay, so if we go down to the lower time frames, and this is where we start with the top time frames, and we're going, okay, the 3-hour time frame, first off, the weekly time frame has given us true direction. It gapped higher. The daily's telling us we're above a pivot. I'll get back to the daily chart on why I sold where I did, and I did sell too early. The stock just continued to move, and but you know what? It's always good to sell early. The worst feeling in the world is when you're in profit, you let that bugger come back on you and take all your profit away. So when we started holding this area and we go down to like an hourly time frame, for example, we get an indecision bar. And I love playing the indecisive bars, these indecision bars. So we get the big push up, and this is what I did like. So I did not care for the 3-hour candlestick pattern. When I looked at the 3-hour, it was a possible reversal. So I'm going, okay, if we can hold this green area, if we can hold and it doesn't just start selling off and we don't start seeing the lower time frames, and reversals happen, once again, I say this quite often, the reversals happen obviously first on the 1-minute chart. Then they also happen first on the 5-minute chart. But the lower the time frame, the more noise we have. The more you have to understand the level and where we're at. The more that you have to, the lower the time frames are, the more conviction you have to have on the direction of the stock. The bigger the time frames are, the less conviction you have to have because they're telling you the direction. A 30-minute support is way more critical than a 5-minute support, for example. So if the bigger time frames telling us we're going to get a breakout is a big time frame, as in like a 3-hour chart for a breakout, is that going to matter if we're running into a 5 or 10-minute support? Probably not, or a resistance. It's just going to continue to break through those smaller time frame supports and resistances. So we get our direction off this 3-hour time frame, and the direction was telling us that we may have an issue. But what I really liked, and I knew that we would get the direction change first on a lower time frame. So I start watching the lower time frames. I want to see what the price action's doing around this, because the 3-hour chart was telling me possible reversal. However, if it held and continued higher, there is a point where there's the point of no return, where the more buyers would step into the stock, where sellers would be forced to be pushed out of the stock. If there were selling pressure, or for example, short sellers thinking the stock price was going to come down because it maybe just popped on the news and then it's one of those sell the news events, then once it broke a certain level, I knew that the stock would most likely continue. Okay, so right as we start getting a hourly close, we get this reversal candle. We get this indecision bar, and we're holding support. So we get a pattern that looks something like this. We get a push up higher, we're holding, and now we're making a move, a flag for a liftoff. Okay, and if you watch, we're going, okay, here's a low put in. We gapped higher, we came down, we put a second low in, right, and then we put in another low. So we get higher lows each time, creeping the stock price up. So buyers are obviously finding the stock price more attractive as the stock continues. Now, what I was looking for next is going, okay, we have an indecision bar, and I love playing indecision bars. And if you haven't seen that video, I encourage you, I will link it in the video above, and you can just watch that one next. But it's a very critical video. I think learning to play the indecision bar is very important. Whenever I see one, I'm very happy, and I start watching where those buyers and sellers are struggling. And so I go down to a lower time frame, and I go all the way down to a 5-minute time frame. Now, I don't always recommend this, especially to new traders, but the 5-minute time frame is what really told me the price action and what was happening. I get a tail candle, and a tail candle is obviously a sign of a reversal. This shows buying pressure in the market. I know by marking out my green lines where the resistance was and where the support was. And we come down to the support, we have buying pressure. We break through this top level of resistance, and we get another tail candle. This is what caused that indecision bar. Now, what's important on the indecision bar, and I get into so much on these critical levels on several different kinds of candlesticks. It could be the indecision bar, it could be many. But since we're talking about the indecision bar, there's a specific critical point on the indecision bar that made me look at this pattern. When I started seeing this pattern form, just like on the daily chart we were talking about, we have the higher low setup. So the stock price continues to get bought up. Once we see this particular pattern right here, it's a very common pattern. We get a push up, a flag pattern over, at the perfect area in the indecision bar, okay? Once we get the push higher, we get the consolidation. Once again, another flag, a rip up, another flag, a rip up, another flag, pullback, and a continue move higher, okay? Now, what I really liked was the 15-minute chart. I'm going to go ahead and get back to this chart here in just a second. I'll tell you where my entries were and where I exit the trade, but going back to the daily chart on where and why I decided to put my exit there. Now, what I did is looking at this 15-minute time frame. Now, if we look at it and we have this indecision bar and we have this candle and we're putting in this sideways move, and the fact that we are where we're at on the indecision bar using our Fibonacci retracement, we can now get an understanding of where buyers and sellers are coming at. And I know that once we pass a certain spot on that indecision bar, with the news that was out, with us holding the correct support, there's always a possibility of the stock coming back. That's why we put our stop loss in. However, we decided to execute the trade at this point. Now, going back to the daily chart, we went ahead and we sold into 122.50, and the reason why is because that's where this tail candle was. Now you can see that it continued to move, but we got a majority of this, of the bulk of, we got the majority of the move, right? And if we put a line in right here, like so, that's where I put my sell order in. Now we bought down here on before halfway in between this green line here, okay? And so let's go back to the smaller time frame and kind of go back and see why I got in and where I got in at, okay? And so what we're looking for on this 5-minute chart, okay, here's the 5-minute. And again, what's important is we have the higher low setup. We have the flag pattern at the critical point of knowing when buyers and sellers, well, realistically when sellers are going to get squeezed out of their position, or when maybe more buyers will step in. So our first high, or excuse me, our first low, we get our second low, we get the pattern sideways, and we get lift off. Right as we got into this here, when we got rejected here and we got this failure coming down, I see a lot of buying pressure coming here. I see a lot of selling pressure. I went ahead and I didn't add, my first position was in on this candlestick here on the pullback. I expected this to happen, whether it was sooner or later. The double bottom I was not expecting, but I did expect a pull up, a consolidation, and a move higher just because of the news. Now, once we did and we got this double bottom and that confirmed for us, which this would be a reversal candle, I get into this in trading in a nutshell. I'll leave in the comments below or the description box below our trading in a nutshell, okay? And you're more than likely to check that out. It's under $10. It goes over the technicals. It helps you understand why we get into the trades. It talks about candlesticks. It's very basic, but it's a good course to start out with, okay? And we have this pullback here in the market. Once this candle closed right here is when I added to my position. As soon as it closed, stop loss is at the low of the last pivot low, and we just went ahead and let the trade work out. We end up taking some off at the very top here, and then we sold into 122.30, or excuse me, 122.44. 40 area. So right around here. Now you can see the stock price continued to move. Now the difference is what we want to look at, and why this was a good trade is look at the way we put our stop losses in. Okay, we get into the position, we got into one position here, and we added to our position here once we got the confirmation. So on the pullback or on the dip buy, I got into the first position. Once we got confirmation, put in the lower high, we put in a second position. Put our stop loss here. So our stop loss and our average is about right here. Okay, so here's our stop loss, and here was our target. It was a terrific risk to reward ratio. This could have, if we measure this out, let's say it goes again here, and again here. It's roughly a 1-to-3 ratio. I could lose this trade 3 times and win it 1 time and still break even in the account. If I lost 2 times in this trade, I would still make money on the 3rd time if I played the exact same pattern, the exact same profit to loss ratio as I did in this trade. And that's what's really important when you're structuring your trades. Understanding that you want to lose 1 time to make 3 times. There are different ways, and depending on the type of trader you are, you could do a 1-to-5 ratio, a 1-to-10 ratio, a 1-to-1 ratio, and take some off. I like to get into my position. I like to add to my position. And I really like to scale out of my position. But I traded very small share size to show people that you can make money with a small account. And so I ended up not scaling out as much. I would still have a piece of the, I would really like to have still had the piece of a partial still continuing to ride. And I like the news on Apple. It was good news, and it had good technicals. And that's what we're really looking for and wanting to pay attention to. First, you need to understand. Okay, you need to understand the pattern. You need to understand the critical levels. We marked out our critical levels. We had a clear direction on which way the stock price was moving because of news. There was only one time frame that didn't really meet our criteria. It was that 3-hour time frame. But we knew if it held this particular level at 120.50, the stock was a go. Okay, and that's what you want to pay attention to. You want to learn and go to school first and learn all the technicals, get everything out of the way so you have an understanding of what the market's about. Then when taking your positions, you're not worried. If you find yourself being nervous when you're in the position, then you're either doing a couple of things wrong. It is you have too big of share size, so you're risking too much. The dollar amount that you invested is too high, or you do not understand what you're looking at yet, and you don't understand when you are wrong in the trade. And if you get these 2 out of the way, you'll be a lot more comfortable when you are trading. Okay, so again, hit the subscribe button, give me a thumbs up at the video if this was helpful or if you thought it was good information. Share it with your friends. We're brand new to YouTube, so all the comments and likes are greatly appreciative. And if you can, ask me questions, have me break down other stocks. I'm trying to get to 1,000 subscribers so I can go live on YouTube, and that way we can break down tickers every single day for you guys, so you have an idea of what you guys are trading, and we can be more involved in the community. Okay, thank you so much. I'll see you in the next one.